Hi, we are Group 6 reporting about the tax system and Philippine development experience. According to Albert Einstein, the hardest thing in the world to understand is the income tax. Why is that so? Is it something that truly benefits people or something that adds up to their burdens? So let us tackle the tax in general. In this presentation, we'll explain the nature of taxation and its basis and the evolution of the Philippine taxation during the Spanish era, American era, and the Commonwealth period. Do you have any insights into what taxes are, how it works, and when it was first introduced and evolved? If you don't have any, don't worry. This presentation will provide you with enough knowledge to grasp taxation in some way. So before we proceed, I'd like to introduce myself as one of the reporters. My name is Jerusalem P. Avalos, tackling the definition, purpose, and mechanism of Philippine taxation. What is taxation? An inherent power of sovereign exercised by the legislature to compulsory charge taxes on subjects and objects within its jurisdiction. It is primarily implemented to raise revenue in order to fund legitimate objects of the government for economic growth. In a nutshell, taxation is an amount of money that compulsory imposed on taxpayers by the government. The tax was used to finance government expenditure on goods and services such as health insurance, retirement benefits, national defense, interest on debt, education, housing, agriculture, etc. Taxation mechanism. The government mechanism of taxation. It is the government mechanism to raise revenue from people they govern to be able to fully function the government. In exchange for this payment, government pledges to enhance residents' lives via excellent governance. Moving forward to our slide, let us go back to the time where taxation was originated and evolved. So we have three periods of time: the Spanish era, the American era, and the Commonwealth period, which includes the Japanese system of taxation in the Philippines during World War II. Next, reporter.
Hi everyone, this is Aleja Ronquillo, assigned to report the taxation in Spanish Philippines. Next, please. The Philippines may have abundant natural resources like minerals, agricultural land, and fisheries even before the trespass of the Spaniards. But our ancestors were mainly involved in a subsistence economy, which means a type of economy produces only enough output for its own consumptions and does not attempt to accumulate wealth. And while the payment of tribute or taxes or the obligation to provide labor service to the datus in some early Filipino communities that resembles taxation in the Philippines. The arrival of the Spaniards made difference to the subsistence system because they charged the payment of tributos from the Filipinos, similar to what had been practiced in all colonies in America. The difficulty faced by the Spaniards in revenue collection, which means frequently refers to a government agency billing the public for fines, taxes, or any other fees, but it is also the general collection of revenue for debts owed by persons or businesses. True tribute was the distribute nature of the settlement, which they solved by introducing the system of reduction by creating pueblos, where Filipinos were gathered and awarded plots of lands to till. There's been reduction policy, which essentially meant forced selection of small scattered settlements in one larger town, which also made it easier for a single Spanish Catholic friar to train Filipinos in the basic principle of Christianity. It was also designed to enable Spain to collect taxes from their Christianized converts. Later on, the settlements will be handled by encomenderos who receive rewards from the Spanish crown for their services. Exempted from payment of tributos were the principals, alcaldes, gobernadores, cabezas de barangay, soldiers, members of the civil guard, government officials, and vagrants. And those who required to pay the tributos are 18 to 15 years old males, the carpenters, bricklayers, blacksmiths, tailors, and shoemakers, towns such as those in road construction, and those who is public in nature. Next slide, please. Towards the end of the 16th century, the Manila-Acapulco trade was established through the galleons. Manila-Acapulco galleon trade was the main source of income for the colony during its early year. Service was inaugurated in 1565 and continued into the early 19th century. The galleon trade brought silver from New Spain and silk from China by way of Manila. This way, the Manila Philippines earned its income through buy and sell. That is, they bought silk from China for resale to New Spain and then bought America silver for resale to China. The galleon trade, it was a government monopoly. Only two galleons were used. One sailed from Acapulco to Manila with some 500,000 pesos worth of goods, spending 120 days at sea. The other sailed from Manila to Acapulco with some 250,000 pesos worth of goods, spending 90 days at sea. It also allowed modern liberal ideas to enter the country, eventually inspiring the movement for independence from Spain. This improved the economy of the Philippines and reinforced the control of the Spaniards all over the country. Tax collection was still very poor and subsidy from Spain would be needed through the situado real or royal subsidy, delivered from the Mexican treasury to the Philippines through the galleons. These subsidies stopped as Mexico became independent in 1820. In 1884, the payment of tribute was put to a stop and was replaced by a poll tax collected through a certificate of identification called the Cedula Personal. Cedulas were first issued based on the royal decree on March 6, 1884. All men and women residents, Spaniards, foreigners, and natives who were over 18 years old were required to obtain a cedula. The only exceptions were the Chinese, who paid another poll tax. All in all, there were 16 different classes of cedulas. Originally, there were 9 classes tax. The rates of taxes ranged from 1.50 to 25 pesos, and the 10 grantees for priests, soldiers, and privileged classes. Unlike the tribute, the payment of cedulas is by a person, not by family. The payment of the cedula is progressive and according to income categories. This system, however, was a heavy burden for the peasants and was easy for wealthy. However, revenue collection greatly increased and became the main source of government income. Next slide, please. Two direct taxes were added in 1887 and imposed on urban income. Urbana is a tax on the annual rental value of an urban real estate. while industria is a tax on salaries, dividends, and profits. These, these taxes were universal and affected all kinds of economic activity except agriculture, which was exempt to encourage growth. Indirect taxes such as custom duties were imposed on export and imports to further raise revenue. There were no excise taxes collected by the Spaniards throughout the years of colonialism. The colonial government also gained income from monopolies, such as the sale of stamped paper, manufacture and sale of liquor, cockpits, and opium. Forced labor was a character of Spanish colonial taxation in the Philippines and was required from the Filipinos. Philippines Polo y servicio is the forced labor for 40 days of men ranging from 16 to 60 years of age who were obligated to give personal services to community projects. One could be exempted from polo by paying the fala, a daily fine of 1.5 real. In 1884, labor was reduced to 15 days. The polo system was patterned after the Mexican repartimento selection for forced labor. This changed later on, as polos and servicios became lighter and was organized at the municipal level. Labor provided was used in public works, such as the building of roads and bridges. Males were required to provide labor for 40 days a year, reduced to 15 days a year in 1884. They may opt out by paying the falas of 3 pesos per annum, which was usually lost to corruption because it was collected at the municipal level and were known as kaidas or droppings. Taxation in the Philippines during the Spanish colonial period was characterized by the heavy burden placed on the Filipinos and the corruption of the principals or the former datus and local elites who were co-opted by the Spaniards to subjugate and control the natives on their behalf. Taxes during the Spanish period was compulsory. All the Spanish colonies in America and the Philippines were required to pay taxes for two reasons. The first one, as recognition of Spain's sovereignty over the colonies, and then the number two is to defray the expenses of pacification, which means the act of forcibly suppressing hostility within the colonies and governance. Next reporting, please. Next reporter.
Next slide. Hi, I'm Diana Rosa Castro, and I'm going to report about taxation in American Philippines. Next slide. From 1898 to 1903, the American followed the Spanish arrangement of a tax collection with a few changes. Taking note that the framework presented by the Spaniards was obsolete. The military government suspended the contracts for the sale of opium, lottery, and main charges for the coinage of money. Now we are going to discuss about the land tax. Urbana will be supplanted by an assessment on the land, which got known as the land tax. The land tax was collected on both metropolitan and provincial states. The issue with the land tax was the naming in the provincial region was messy. The evaluation of the land esteem was affected by the political and familial elements and the presentation of a collection of a tax collection frameworks on horticultural land confronted complaints from the landed first class. Tax avoidance was the common particularly among the elite. Tax evasion was prevalent, especially among the elite. Let's now discuss the Internal Revenue Code. The Internal Revenue Code, or IRC, allude to Title 26 of the U.S. Code, the authority, combination, and codification of the general and perpetual laws of the United States. As the code prelude clarifies, usually allude to as the IRS Code or IRS Charge Code. The laws in Title 26 are implemented by the Internal Revenue Services. The United States Code was the first distributed in 1926 by the U.S. Place of Representatives. Title 26 covers all pertinent standards relating to pay, blessing, estates, deals, finance, and tax charges. The Internal Revenue of 1904 was passed as a reaction to the problems of collecting tax. Next page. Next slide, please. There are 10 major sources of revenue. Number one, license taxes on the firms dealing on an alcoholic beverage and tobacco. Two, excise taxes on alcoholic beverage and tobacco products. Three, taxes on banks and bankers. Four, document stamp taxes. Five, the cedula. Six, taxes on insurance and insurance companies. Seven, taxes on a forest product. Eight, mining concessions. Nine, taxes on a business and manufacturing. And 10, occupational licenses. In 1907, some provinces were authorized to double the fee for the cedula to support the construction and maintenance of the road. Now let's tackle the industrial tax. Industrial tax was levied, a levy on the business community, and became highly complex system that assigned a certain tax to an industrial or commercial activity according to their profitability. Next slide. In 1913, the Underwood-Simmons Tariff Act was passed, resulting in a reduction in the revenue of the government as export tax levy on sugar, tobacco, hemp, copra were lifted. New sources of taxes were introduced later on. In 1940, an income tax was introduced. Income tax is a type of tax that government imposes on income generated by business and individuals within their jurisdiction. Income tax is used to fund public services, pay government obligation, and provide goods for citizens. In 1990, the inheritance was created. Inheritance tax is a tax paid by the person who inherits money or property of a person who has died, whereas an estate tax is a levy on the state's money and property of a person who has died. International tax law distinguishes between an estate tax and inheritance tax. Estate tax is assessed on the assets of the deceased, while an inheritance tax is assessed on the legacies received by estate's beneficiary. And lastly, in 1932, a national lottery was established to create more revenue for the government. Inheritance tax was created, and in 1932, a national lottery was established to create more revenue for the government. Income tax rate increased 1936, adding a surfax rate on individual net income more excess of 10,000 pesos. Income tax rates for corporation were also increased. Next slide. Next reporter.
So, good day everyone. I am Kevin Brizuela and I will be reporting you the taxation during Commonwealth period. So, what is taxation during Commonwealth period? So, it is a new measures and legislation were introduced to make the taxation system appear more equitable during the Commonwealth. Next. So, income tax in 1936, it was increased through the adding surtax rate on individual with net income over 10,000 pesos. So what happens in 1936? So in 1936, income tax rates were increased and adding a surtax rate on individual net incomes over 10,000 pesos. So next is cedula in 1937. So in 1937, the income tax rates of corporation were also increased and the cedula tax was also abolished, which appeared to be a progressive move. In residence tax in 1940. So a residence tax was imposed on every citizen aged by the 18 years old and on every corporation. Next, please. So National Internal Revenue Code in 1939. So in this year, the Commonwealth government drafted the National Internal Revenue Code, introducing major changes in the new tax system, and it is as follows. So the first one is the normal tax of 3% and the surtax on income was replaced by single tax at a progressive rate. The second one is personal exemption were reduced. And the third one is corporation income tax was slightly increased by introducing taxes on inherited states or gifts. So the fourth one is the cumulative sales tax was replaced by a single turnover tax of 10% on luxuries. And the next one is taxes on liquors, cigarettes, forestry products, and mining were also increased. And the last one is dividends were made taxable. So in this part, the the introduced tax structure was in an improvement of the real system introduced by the Americans, but it also remained inequitable. So finally, in a common character of taxation during the American occupation in the Philippines was not used to diversify the economy of direct economic development as some sectors still carried the disproportionate share of the tax burden. Next, please. So the last one is the taxation during World War II. So during World War II, the Philippines reached the shore. Economic activity was put to a stop, and the Philippines bowed to a new set of administrators, which is the Japanese. So the Japanese military administration uh, in the World War II immediately continued the system of tax collection introduced during the Commonwealth, but exempted the articles belonging to the Japanese Armed Force. So the foreign trade fell, and the main sources of taxations come from amusement, manufacturers, uh, professions, and business licenses. So in the war age, the tax collection was a difficult task, and the additional incomes of the government were derived from the sales of the national sweepstakes and sale of government bonds. That's all po. Thank you.